What's going on, guys? Mike here. Today I want to talk to you about how the markets responded to the PPI release. For those of you who don't know what PPI is, it's the producer price index, and the numbers were released today, and obviously if you haven't checked already, the market hasn't been responding very well to it. So just looking on my screen here, you can see it was forecasted to be 5.4%, and it actual came in at 4.6%. For those of you who don't actually know, the PPI is the measurement of it says right here the measurement of change in price of goods sold by manufacturers. So yeah, basically, if a higher than expected reading should be taken as a positive or a bullish market for USD, and while lower is expected of reading to be taken as a negative or a bearish market for USD. So like I said, it came in at 4.6% when the forecast was 5.4. So that mixed with the Silicon Valley bank crash, as you can see here as well. Everyone's starting to get a little bit nervous with how the markets are going. Also, too, I actually haven't looked, but if you look at the VIX index, let's see here. Yeah, like you can see how that's kind of going up as well. And for those of you also who aren't aware, but typically anything over 20 kind of indicates more volatility within the markets. So yeah, obviously that's on an increase as well. So I guess moving on, just looking at some stocks here that I have in my TFSA. Enbridge is down 3.67% today. XEQT, which is my global index fund that I have, down 1.4%. Plaza REIT, which is Canadian real estate REIT that I have as well, down 0.89. Power Corporation 2.3. Smart Centers down 1%. TELUS actually went up 0.11, which is surprising. And TD Canada Trust almost down a full 2% at $79.40, which is crazy. If you're looking at TD Canada Trust right now, we're just about at its 52-week lows. Looks like the 52-week was 78.17. So looks like we're obviously approaching that as well. So yeah, not all the banks though seem to be taking it as hard. Royal Bank actually seems to be not doing as bad as some others. So that's kind of a positive, I guess, if you have stocks there. So I guess I just kind of wanted to point out that this is the reason why the markets seem to be kind of going down as of late. And just kind of wanted to show you a little bit of an update of my portfolio here. Also too, I guess if we look at my RSP, you'll actually see here bonds are on the rise, which I guess kind of makes sense. People are kind of going towards more safer investments. I do kind of want to point out though, as people kind of default to more of a safer investment, I have another video. It might be out before this one or potentially just after, which is the PSA ticker symbol, Purpose High Interest Savings ETF. One thing I have a video that explains this, but I do have a cash, $4,600 sitting as cash here, which is sometimes a little bit of a nicer play in times like this if things are kind of going down. But my typical strategy with this is I actually just kind of hold the cash until we have dips like this. So I actually will most likely be selling off some of my PSA as we keep kind of going down on a downward spiral here. But again, my strategy doesn't always, fit everyone else's. Typically, if you're wanting to be more on the conservative side, being in equities right now is maybe a little bit more risky. And maybe high interest saving ETF is maybe where fits your needs more efficiently. Just as a quick recap as to what PSA does is it's a high interest savings ETF, and it basically starts at $50 every month. And as the interest accumulates, like a high interest savings account, you can see here by the end of February it was at $50.20, and then they pay out whatever's over the $50 mark. So you can see come the first or after the X date, I guess, for dividends, it drops right back down to 50, which is paid out in dividends to the shareholder, and then again starts all over the next month. It just slowly increases and it'll pay out at the end of the month. Some other kind of tips, for saving some cash, or preserving some cash in kind of volatile markets. Again, savings accounts, better to have it in something where it's at least accumulating 2.5% interest. Again, I have a video out about EQ Bank. If you don't know what this one is, please check it out. Otherwise, everyone, I guess, stay strong.